New Deep Dive.
Welcome to the Deep Dive. Today we're plunging into, well, a global market event that certainly got everyone talking. In global finance, headlines often make waves, right? But a recent announcement from President Trump sent maybe more than ripples, perhaps a definite tremor through markets worldwide. We're talking about new tariff plans, and the numbers are pretty striking. For this deep dive, you've given us a really good set of sources covering the announcement itself, the immediate market reactions, which countries are most affected, and this very tight implementation timeline.
Yeah, and what's fascinating here isn't just the sheer scale of the proposed tariffs, 70% in some cases. It's also how swift, how interconnected the reaction was. It just reverberated across different economies almost, well, instantaneously. So our mission today is really to cut through some of that noise and help you understand both the immediate impacts and maybe the broader, longer-term implications of these new tariff strategies.
Okay, let's jump right into that initial shockwave then. What actually happened? So President Trump announced plans to impose these tariffs potentially as high as 70% on several countries. We understand 10 or 12 letters about this went out on Friday, July 4th. And the new rates are supposed to take effect August 1st. That's just days after the July 9th Liberation Day tariff suspension expires. Could you just quickly clarify for us what that Liberation Day suspension was about?
Sure. The Liberation Day suspension, that was put in place back in April. It essentially offered a temporary, like a 90-day pause on certain existing tariffs. It was for countries as they entered negotiations with the U.S., sort of meant to create a window for new trade deals. But, well, that window is closing fast now.
Okay, so that sets the stage. With that context, how did markets react, I mean, specifically to such a sudden announcement and that looming August 1st deadline?
Oh, the reaction was immediate and sharp. It largely reversed the recent optimism we'd seen. U.S. stock futures, the Dow Jones specifically, fell sharply, about 250 points right after the news broke.
Wow, 250 points.
Yeah. And it wasn't just the U.S. This ripple effect went global. European markets like the stock 600 closed down 0.5%. Asian markets, too. South Korea's KOSPI, that's a key benchmark, dropped 1.6%.
That's a pretty dramatic reversal, especially after things seem to be looking up a bit. Wasn't the S&P up quite a bit recently?
Exactly. It's notable because it totally reversed the S&P 500's 26% rise since that low point back in April. That was when Trump had initially pulled back from his earlier tariff strategy, the one that raised rates to, well, 131-year high. So, yes, while markets are always a bit jumpy about tariffs, I think the suddenness of this, bringing them back so quickly, and the high rates, yeah, it caught many off guard after things had calmed down a bit.
Right. And what about other assets? Did we see money moving around, people looking for safety?
Absolutely.
Yeah.
Classic flight to safety. In the face of this renewed uncertainty, investors quickly moved to traditional safe havens. Gold, for instance, it ticked up 0.3% to about $3,350 an ounce. And at the same time, the dollar actually weakened against major currencies. The Japanese yen, the euro, the British pound. That suggests a flight from dollar assets, right?
Makes sense. And commodities, usually sensitive to trade news.
Yep, they reacted too. Showed signs of trade disruption fears. Copper futures fell about 0.5%, oil dropped 0.2%. So this really widespread reaction, it just highlights how much markets hate uncertainty. And a sudden, broad shift in trade policy like this, it creates a massive amount of it, leads to this kind of immediate, widespread capital moving around.
So the market's aversion to uncertainty is definitely a key factor here.
Okay.
That brings us to the next really critical question. Who exactly is in the crosshairs? Which countries are looking at these higher rates?
Well, President Trump didn't explicitly list every single country getting the maximum 70% rate, but his administration is definitely developing what sounds like a complex web of targeted barriers. The key thing is the tariffs will vary widely. Some might be 10–20%, others that maximum 70%. It seems primarily targeted at those 10 or 12 countries that haven't managed to secure a new trade agreement by that July 9th deadline we mentioned.
Okay, so it's linked to getting a deal done. Can you give us some examples? Which major trading partners might be affected?
Sure. China, well, it remains the most affected, as the source material puts it. They previously faced tariffs, remember, as high as 104%. For a recent agreement brought them down to 30%. So they're still very much in the picture. The European Union, they were previously subject to 20% tariffs. Vietnam faced a base rate of 20%, plus this extra 40% on re-exports, which is interesting. Generally, it looks like countries with high proportional trade deficits with the U.S. are the likely candidates for the higher rates.
And what about this reciprocal tariffs idea? That's the framing, right?
That's the administration's framing, yes, simply mirroring the duties other countries impose on U.S. goods. But economists have been pretty quick to criticize that approach. They call it oversimplified. The Economist magazine even described it pretty sharply, saying it's almost as random as taxing based on the number of vowels in your name.
Wow, okay. Almost random. That's quite a critique.
Okay.
Does this suggest maybe a fundamental shift in how trade policy is being thought about, like moving away from established economic ideas, or is it just a really aggressive negotiation tactic?
That's a really important question, I think, that random criticism isn't just, an academic joke. It really highlights this disconnect between traditional economic theory, which values predictability, clear rules, and this administration's more, shall we say, ad hoc approach. The insight there, for you listening, is how that kind of perceived unpredictability can really erode trust and long-term investment, even among allies. It pushes trade relations into sort of uncharted, less stable territory. And it's also surprising, even U.S. allies with trade surpluses like Australia haven't always been excluded from Trump's tariff strategies in the past. It's not just about deficits sometimes.
Right, that adds another layer of complexity. Okay, so with these big market reactions, the next critical piece is the timeline. It sounds incredibly fast. When do these new rates actually kick in, and what does that mean for businesses and, well, consumers globally?
August 1st. That's the date. It marks a crucial turning point. That's when countries are obligated to start paying these new tariffs, unless somehow trade agreements are reached before then. The formal process actually started back on July 4th with those notification letters going out, which gives countries less than a month, really, to either negotiate a deal or just prepare for these significant import duties.
Less than a month? That's not long.
No. And Trump himself emphasized the deadline, saying by the 9th, they're fully covered. He's referring to July 9th, which is when that 90-day tariff suspension we talked about, the one from April, officially ends.
Okay, so an incredibly tight window for negotiation then.
Yeah.
Have any countries actually managed to navigate this successfully, or are most just facing these new tariffs come August 1st?
Very few, it seems, have successfully negotiated exemptions in this particular round. So far, the reports mention only the United Kingdom, Vietnam, and China as having secured them. Talks are apparently still unresolved with several others, including big ones like India, Japan, and South Korea.
So still a lot up in the air for major economies. How does this compare to, say, previous rounds of tariffs under Trump?
Well, it follows a pattern we saw during his first term, definitely. Like, remember the March 2018 tariffs? Steel at 25%, aluminum at 10%. And those were followed by gradual increases on Chinese goods, which then led to, predictable retaliatory actions from trade partners.
Right, I remember that being more step-by-step.
Exactly. A key difference this time seems to be the August 1st deadline. It signifies a really sudden shift. It's not like the more gradual introductions we saw before. And the speed of this implementation compared to previous rounds, that's what's really quite fascinating, and how that might impact not just global trade, but maybe even domestic economic policy. Economists are already cautioning that this abrupt change could complicate things for the Federal Reserve, in their efforts to manage inflation, because businesses and consumers are likely to feel the effects almost immediately this time.
Right, so let's recap quickly. We've seen these incredibly steep tariffs announced, potentially up to 70%, a rapid, pretty widespread market reaction, stocks down, safe havens up, a broad scope of countries potentially affected, especially those without deals by July 9th, and this incredibly tight less than a month implementation timeline before August 1st.
Yeah, zooming out, you can really see how quickly these high-level policy decisions just cascade down. They affect everything from, your stock portfolio potentially to the price of goods you might buy at the store, and the speed with which businesses and consumers will likely feel the effects of this shift makes it particularly impactful, I think.
Indeed. And it leaves us with a final thought, maybe something for you to consider. How does the strategy described by the administration as reciprocal end up being perceived as random by some of the very economists trying to understand its effects? What might that imply about the future of international economic relations, maybe beyond just trade? Especially when trust and predictability seem to be, well, eroding in this new landscape.
Subscribe. New Deep Dive.